The big story of the morning is what happened with the BOE, signaling that it may need to do more to combat the economic hit from the coronavirus. The central bank leaving rates now unchanged, said the UK economy could contract as much as 14% this year. Bloomberg's Francine Lacqua spoke to Andrew Bailey, the Bank of England governor, following that policy decision.
We're keeping all options open. I mean, I'm very clear on that. We're keeping more options open. Two of my colleagues on the committee voted to do more QE now. Other members of the committee thought that it was a sensible decision to take in our next meeting when we may have some more information.
Are we any closer to negative rates, or is that just not an option right now?
Well, I don't think we're not ruling anything out at the moment, because it would be unwise of us to rule anything out in terms of responses. So I don't want to say we're nearer to negative rates, but we're not ruling anything out.
Under what circumstances would we get negative rates?
I think that the committee has got a long way to go in terms of discussing the negative rate question, were it to think that that was a sensible thing to do. It's a complicated question. You have to view it, I think, in the context of the times, also in the context of the financial structure we have, how the financial system works, and what will be the consequences of it. So I just want to caution, we're nowhere near concluding in that respect.
So you assume a recovery in 2021.
Yes.
Why are you more optimistic than the ECB?
Well, again, we're all using scenarios, and I want to be quite clear that I think all of us are, finding that there's a much bigger sort of gap between the judgments and decisions we're having to take and the scenarios we're using, which is, by the way, why for the first time, really, in any inflation report, monetary policy report, we haven't published a forecast as such. So these are very much scenarios to guide us. I was looking at the scenarios the ECB published earlier this week, and actually you can cite our world economy scenario that underpins our forecast. It very much sits, frankly, in pretty much the middle ground of what the ECB published.
But what does it do to forecast, or what does it do to your thinking if we have a slowdown that is not as severe this year, but then we have a much worse number in 2021? If there's a second lockdown, for example?
Yes. Well, we would obviously have to reevaluate, and there would be a new scenario that we would use in that case. We've got a gradual lifting of the lockdown in the third quarter of this year. We've got a further assumption that actually people in a sense, I put this in quotes, voluntarily are then quite cautious about the way they re-engage. So we've got a degree of caution that pushes the path of our recovery out into next year. Obviously, if the whole disease then evolves in a different way, we will have to just come back to that.
Is there still a risk that this crisis becomes a financial crisis?
Well, obviously, if you go back to the middle and the second half of March, we were looking at very, very severely difficult conditions. I mean, very disorderly markets. We and the other central banks had to step in. We've all stepped in very big ways. A lot of firepower has been brought to bear. It's been very closely coordinated between the central banks, and it has had an effect. But I would say this, that I think we are still on very high alert, because I'll give you the example of what happened in the oil price the other day, in the West Texas price. I mean, I got home one evening to find the oil price was negative. You just think, how can this be? Now, interestingly, of course, as you know, you'll have talked a lot about this, there are all sorts of stories you can tell about how this is idiosyncratic, all sorts of things about Cushing, Oklahoma, and so on. But I would just caution that, history, and I've seen a lot of these, bears out. Yes, we can always tell stories, but to dismiss this as just a sort of slightly odd idiosyncrasy, I think there is always one thing you have to have in mind. Is this a sort of canary in the coal mine, which says, actually, there are wider, fragilities here that we have to be considered, and that's certainly our view. It's not because we have a particularly different story about the oil story. It's because it points to the fact that we've still got fragile markets.